Is your startup idea a unicorn? This is from an investor's perspective. In this video, I'm going to explain the fastest way for you to determine whether your startup idea has the potential to become a unicorn and raise investment dollars. I'm going to be explaining to you from the perspective of a 7-time founder with 2 exits, as well as someone who's raised over $100 million for my startups, other people's startups, as well as startup funds. And I've had to look at dozens, if not hundreds, of pitch decks to determine this very question: does it unicorn? Because at startups.com, I have founders come to me every single week, dozens of founders, and they're trying to raise capital. And this is the question that everybody has to ask themselves, especially if you're trying to raise from VC. First of all, let's determine what is a unicorn. For the sake of definition, a unicorn is a private company, not public yet, because there are a lot of public companies worth way more than $1 billion. A private company worth $1 billion as far as valuation is concerned. That is considered a unicorn. How you get to that valuation, well, there are a lot of factors that determine that. Usually it's revenue and market upside potential, but that is what a unicorn is. That's the definition that we're going to work with. Why is this important? Because if you are trying to get VC dollars, you're trying to get venture capital, you have to be a unicorn. That's what VCs want to invest in. And too many founders go to VCs and say, hey, can you invest in me? And they don't have a unicorn, and the investor says no, and the founder is either surprised, shocked, or disappointed. You have to understand, if you're raising VC, you are implying that your startup idea has the potential to be a unicorn, and you have to figure out how to prove that to them or determine that yourself before you even go to those investors. Let's talk about the wrong ways to do this. The first wrong way to do it is a top-down analysis. If you go out and you research and you figure out that your industry that you're doing your startup in is worth $1 trillion, cybersecurity is $1 trillion, and if we just get 1% of that, we're going to be unicorns, yay. That is not the way that you determine a unicorn. That's not the way investors do it. And if you go to that investor in this manner, well, they're just going to write you off because you're going in with a top-down analysis. That is not the way that it's done. The second common way is to do it on revenue alone. This is what founders do. They say, okay, I have 1 million potential customers, and they're going to pay me $100 each. Therefore, I will make $100 million, and there are enough customers. And if I do a 10x multiplier, that is a unicorn. And that is a very solid way and an argument to do your math, but that's not what makes a unicorn. Just because you have that many potential customers and you could be making that much money does not mean in the minds of the investor that you are going to be a unicorn or even have the potential to remotely become a unicorn. So while revenue is going to be important, it is not a good measure in of itself. You don't want to make this common mistake. The final wrong way, and this is a little facetious, adding a bit of humor to it, but it's actually pretty true, is hopium, or in other words, copium, meaning that we just hope it becomes a unicorn. There are so many other factors other than just your optimism and hope that determine in an investor's mind that you can become a unicorn. And then there's copium, meaning that you're coping for the fact that investors aren't interested. And you're saying, but we're a unicorn. We're $1 trillion idea ready to happen, to either make yourself feel better or justify your arguments. Like I said, it's a bit of a joke, but you'd be surprised how many founders fall into this category. Here are the 3 questions that an investor is going to ask themselves and most likely ask you to justify the answers to determine whether you have the potential to become a unicorn. Now, let me be clear. I'm not judging whether you can become a unicorn, what your chances are. I believe every founder has a better than 0% chance of totally going unicorn. I'm talking about how you evaluate your idea in relation to how the investor sees your idea, so you understand how investors make decisions. First question: does the world need another X? Insert the industry, insert what you're working on there, and you need to be honest. Does the world need another social network? Does the world need another marketplace for freelancers? And just because the world could use your product doesn't mean that the world needs your product. There's a big difference. If you are in a saturated industry, for example, you're trying to create a SaaS, which is another ERP for enterprise companies or for small business. Think about how many of the incumbents, how many competitors are out there that are already solving the problem with deeper pockets than you. And if you have a lot of companies in that space and they all take up like 10, 20% of the market each, and everyone's just existing and just trucking along, then the chance of you breaking into that and getting big enough to be a unicorn are very small. That doesn't mean you can have no competition in your space. Think about Uber, and then Lyft comes along, and that's totally fair. You might be entering a space that's big enough and you might have late mover advantage. Let's say you're second or third, but there's enough to make it a big enough market and that the world needs more of what you are trying to do. But that's where honesty is very important. You're going to have to do a gut check, look in the mirror and say, does the world really need XYZ, whatever you're building. Now, let's say you get to the point where, yes, there is room for another of my XYZ, what I am building. The question then you have to ask yourself is, will it be 10x better? One order of magnitude better than what's out there? And again, you have to be honest. And the pressure on this increases the more competition you have. But think about all the food delivery services or all the delivery apps out there and the services. If you're going to compete with them and there's a lot of competition, you have to be 10x better than all of them put together. And that's quite a big challenge for startups, especially if you're early stage, you got limited funds. You're going to have an idea that's so crazy that dramatically 10x's the options out there for the customer, that they drop whatever they're working with, whatever they're used to, and change the behavior, which is a lot of work and a lot of convincing. Now, let's say you go into an industry where there are no solutions or there are manual alternatives, ways people are trying to solve the problem, and the market is underserved, underrepresented, and underestimated. Well, by default, your solution is going to be 10x. That's why investors want you to go into places where there aren't solutions for the problems that are very painful that people are ignoring. But like I said, if you go into blue ocean and you know that nothing is out there or they're doing some alternative forms because a real solution doesn't exist, you're automatically going to be a 10x. That works for you. VCs will be interested. The final question is, do we believe the founders can make $100 million? And this is where the revenue comes in. And it's going to be based on a percentage of TAM. There has to be a realistic assessment of the founders, and I have to be able to look at you and say, okay, let's say your total market is 10 million people, and I'm just rounding numbers for simplicity's sake. Do I believe that you can get 1 million of those people to pay $100, and that's the price of your product? 1 million users at $100 each is $100 million, which qualifies you for unicorn. If you're building innovative, unique technology that you own, and you do a 10x revenue multiplier, that's $1 billion. Congratulations, you're a unicorn. But now I have to look at you and say, do I believe that you can get 10% of your market and you can convince them to pay $100 each? So can I believe that you'll get 1 million users and get $100 from them? That's a decision that I have to make, and you have to give me the evidence and prove it to me. Because the more you can prove that to me, the more you de-risk the investment, and the more excited that I get, the more enticed, maybe got some FOMO, the more motivated I am to invest in you, because I believe that you've got a stronger chance than other investments that I could be making of becoming a unicorn. So let me repeat. Those are the three questions. Does the world need another of your X? Be honest. Will it be a 10x solution? Will it be 10x better, one order of magnitude? Be honest. And finally, do I believe that you're going to go out and make $100 million a year based on a percentage of your TAM? Is that realistic? Let me end by saying not every startup must be a VC-backed unicorn. If you're sitting there going, but Ed, what if I go build a startup that just makes $10, $20 million a year? Go do it. If you have the capability of doing that, well, that is a completely different path, and you might just enjoy that so much better. I know some founders that are really happy with their $5 million a year business that they own 100% of. But if you really can't qualify and you've got that unicorn idea, well, then you're going to need VC to get to that $100 million in revenue, $1 billion private evaluation. More power to you. Not knocking you whatsoever, but just remember, not every startup must be a VC-backed unicorn. There you have it. Be honest with yourself. Check out some of the other videos that I put on the screen. I got more stuff coming for you, but I just wanted to spend this time and be as quick as possible and say, hey, is your idea a unicorn idea? Well, let's find out together. Talk to you soon. See you in the next video.